Trading volume had decreased drastically from quarter 2 to quarter 3. The NFT market took a heavy hit in the past quarter. Hello and welcome to Voice of Crypto's roundup of 2022. I'm Namrata Shukla and this is the third part of the 4-part series that we are doing on this crazy year. This video will cover the third quarter of 2022, wherein we saw massive fallouts from Terra collapse. However, that wasn't the only thing that happened in Q3. Tornado Cash sanctions, Ethereum merge, DeFi rebounding, and the beginning of NFT's winter. We'll discuss all these events in today's video. So let's start by viewing the state of the crypto market as Q3 began. Compared to the market volatility witnessed in Q1 and Q2, Q3 appeared to be stagnant. After witnessing massive drop in value in Q2 to $19,960, Bitcoin mostly moved sideways and tried to recover to $25,000 in Q3. However, it ended the quarter nearly at the same price as it started. The reason why Bitcoin price wasn't showing any massive swings was the Terra ecosystem collapse, which was followed by a fallout of other crypto businesses. Even the total market cap seemed to have found its bottom when it reached a low of $875 billion on July 19th. However, in August, the market cap reached $1.2 trillion before falling again to end the quarter at about $100 billion, still higher than what it reported in Q2. As the market was still trying to find its feet amid global economic turmoil, especially with the ongoing war between Russia and Ukraine, we saw some authorities from certain countries take strict actions against crypto platforms like Tornado Cash. Tornado Cash. In August 2022, the US Treasury Department imposed sanctions on the decentralized cryptocurrency mixing service Tornado Cash. It cited that it played a role in laundering billions of dollars of cryptocurrency through its platform. So what exactly are mixers? They are nothing but a service that blends the cryptocurrencies of many users to jumble the origins of owners of the funds. The Treasury therefore immediately prohibited US citizens and businesses from using or being associated with the service. The US Department of Treasury's Office of Foreign Assets Control enforced the sanctions and ensured that any US-based business would cease utilizing the protocol. In April, OFAC added 3 of Lazarus known Ethereum addresses to its sanction list before adding Blender, a privately owned mixer, in March and Tornado Cash in August. According to research from Chainalysis, about 23% of crypto that has been transacted through mixers in 2022 is illicit. This number was up 12% compared to last year. However, of the approximately 4.5 billion sent through mixers so far in 2022, most of these funds are seemingly legitimate. Now it's unclear if all of that money is sanctioned as far as the US government is concerned. However, one thing was clear, that even the decentralized applications were not safe when it comes to these sanctions. This has caused great instability in market, especially for stablecoin USDC. USDC issuer Circle began blocking wallets linked to Tornado Cash with the US sanctioned. It froze more than 70,000 USDC on wallets connected to sanctioned Tornado Cash, ergo complying with the US regulations. Maker, the DeFi protocol behind the DAI stablecoin, reduced its exposure to centralized stablecoins such as Circle's USDC. Binance also announced that it would be ending support for USDC trading pairs. Instead, the crypto exchange would auto-convert USDC deposits with BUSD. Now let's talk about the Ethereum Merge event. One of the biggest events of 2022 was the Ethereum Merge event. It saw Ethereum network shifting from an energy-intensive proof-of-work blockchain to a much more environmental-friendly and sustainable proof-of-stake blockchain. The merge occurred in mid-September, turning Ethereum into a deflationary token after introducing new mechanisms into the blockchain. Unfortunately, the market didn't see a positive rally following the merge due to the enormous global macroeconomic forces and previous protocol collapses in the year's second quarter. Nevertheless, it did bring Ethereum into a new era of sustainability and scalability. The effects of the merge will continue to be felt throughout 2023 and beyond, especially when the bearish sentiment starts to clear. Researchers estimate that Ethereum should now consume 99.9% or so less energy. This was similar to Finland shutting off its power grid. Meanwhile, the digital asset Ethereum was seen climbing in value 2 weeks before the merge. Despite how the merge was touted to be the most bullish event for Ethereum, the upswing was only brief. A combination of the high CPI, the anticipation of an aggressive FOMC hike, traders positioning themselves to buy the rumor and sell the news meant the sell-offs had already started days before merge. With these bearish macroeconomic conditions dominating the market, general consensus is that the merge was a successful non-event. Overall, ETH still rounded Q3 with a 26% positive price return, a market improvement over the first half of 2022 despite an anticlimactic price rally leading up to the merge. After the successful merge event, let's talk about DeFi. DeFi enjoyed a decent rebound in Q3 2022 as most sectors managed to stem the bleeding and then some. Overall, the DeFi market cap grew almost 31% quarter over quarter. Even though Ethereum plunged 33% to $1,330 from its quarterly high in mid-August, it was still up by 26% compared to Q2. Besides maintaining its status as the legal constituent of DeFi, DEXs notched a significant increase in the market share, rising 36.8% to 10.9 billion. This can be attributed to the uptick in trading volume and volatility for governance tokens of liquid staking protocols, largely driven by the merge narrative. After the rebound of the DeFi market, let's move on and discuss NFT's winter market. Trading volume had decreased drastically from quarter 2 to quarter 3. The NFT market took a heavy hit in the past quarter, registering a 77% fall in trading volume across the top 5 NFT marketplaces that are OpenSea, Magic Eden, LooksRare, X2Y2 and CryptoPunks. September numbers show that almost 85% of X2Y2's volume potentially came from wash trading, which would have given it an edge over OpenSea on the leaderboard. The same goes for LooksRare, which, despite its always meager volume, still apparently was driven by 87% wash trades. Magic Eden was the only NFT marketplace that saw growth in September, doubling its month-over-month volume and dominance, while the rest of the competitors continued to slip. With its recent foray into Ethereum as well as the headline-grabbing launch of Youths, Magic Eden has gained ground on OpenSea's dominance in Q3. So Q3 has ended with the merge event, DeFi bouncing back, and a little bit of regulatory pushback. In the next video, we will be discussing more recent events and obviously the FTX collapse. So stay tuned to catch the last part of this 4-part series of Crypto Roundup.